G'day and welcome to this week's video. This week we're going to review a funds management business that's been in the news quite a lot recently, and that's Magellan Financial Group. Now Magellan has been on the block for around 10 years and manages an astonishing $50 billion. Now at the moment they're looking to raise a new trust called the Magellan Global Trust, and this could be one of the biggest types of listings of its kind. But what we're keen to do today is have a look at some of the share price action and the business as a whole, which is a business that we've followed for many years and a business that we like. It's run by Hamish Douglass. He's the CEO and founder of the business. It was founded by Hamish and Chris Mackay approximately 10 years ago. And over that time, they've started off at a zero base in terms of fund management, and they've grown it exponentially to $50 billion. So Hamish and Chris have done an extremely good job in that. But just of late, really since the reporting of their last year's performance, we can see here that the share price, which topped out at $29.31, has come down to $23.28. So quite a bit over a 20% decline in a very short amount of time, which you can see here on the graph. So I think there's three main reasons that why the share price may have come back somewhat, and I think one of the key issues would be around profit growth. And I think the headline figure from last year's results, and we can see this here, that the profit after tax was essentially down 1%. So if we just focus on that figure itself, we can say, well, geez, growth is now gone. The business is not growing like it used to. If we just look at that, then we say, well, it's all pretty black and white. Growth is gone. But if we look to delve a little bit deeper and have a look at the top line here, that the core funds management business, where they get, obviously you can see here the bulk of their revenue from, is actually grown 50%. And the parts that had the major impact on the bottom line to make it flat line like it's done has been, for the most part, the performance fees. Now, performance fees is when Magellan outperforms the market with its funds, and they retain 10% of that outperformance. Their investors retain the remaining 90%. So that outperformance can come and go like the breeze, and we can see here that in 2016 it was nearly $50 million, and it's all the way back to just under $22 million. And there's obviously other revenues for consultancy and the like that have had an impact as well. So these income lines can come and go like the breeze depending on the markets and depending on performance. But here for me the key issue is substantial growth of the funds management business. So I think that's what's contributed somewhat to the decline in the share price. I think another one that we can't ignore is the strength of the Australian dollar. So again, this is just in very much recent times, the last 12 months, and we can see we're at around 80 cents. So it's been down a bit under 70 cents over the last 2 or 3 years. So that's a pretty strong Australian dollar. So that's definitely had an impact. As the Aussie dollar goes up, then obviously that reduces the amount of funds under management that they're looking after in Aussie dollar terms. So that's definitely had an impact on share price. And the third thing for me is the Magellan Global Trust. Now, this could be a masterstroke for the business. It's going to be a very large trust. They're hoping that it'll be in excess of $1, $2, or possibly $3 billion. So it'll be extremely good. It'll be a closed vehicle. So it means once the money's invested, that Magellan, the business, can continue to invest that money from here through for many years to come. And investors wishing to exit can simply sell to another investor rather than actually redeeming the funds from Magellan itself, who can't look after that money anymore. So as a unit holder in the trust, people can sell to another investor. The amount of money that Magellan invests stays exactly the same. So they've been very creative and been very generous in terms of this offer. And you can see here on the third bullet point down, and this is for eligible investors, so shareholders in the Magellan Financial Group and also investors in their eligible vehicles, so their managed funds, can receive a priority offer up to 10% of their holding or $30,000, whichever is the higher, which means those people with this priority offer can get a 6.25% bonus allocation of shares. And that's something that Magellan Financial Group is going to pay for. So the business is paying for this, not the investors within the trust. So very generous. Of course, it's a fair carrot. Hamish is a clever man. He's wanting people to invest into the trust. He's also offering a very generous dividend or distribution reinvestment plan of 5% the net asset value. So I wonder if this is starting to weigh on the share market's mind. But for me, these are all short-term considerations. If they get $2 billion under management, it will cost them $125 million in these loyalty bonuses, the 6.25%. But that's 1 year. They will manage this money for potentially decades. So that's my wrap of Magellan Financial Group's share price at the moment. It has come down quite a lot. I personally think it represents good value, but please keep in mind this is not a recommendation to buy, and you need to be aware of obviously a general advice warning that we have not taken into account, or I've not taken into account, your personal financial situation. This is merely Robert Goudie's opinion on a business that we like and we follow in depth. Thank you for listening. Give us a thumbs up if you like the video and subscribe to the channel. That'd be great, and we'll catch you next week.